When conflict erupts in the Middle East, a region of immense geopolitical significance, the repercussions extend far beyond its borders. It's not just a distant headline on the news, it hits your wallet, impacting your everyday financial life in ways you might not immediately realize. A missile fired in the region, thousands of miles away, can send shockwaves through global markets, triggering a chain reaction that affects economies worldwide. This, in turn, can negatively impact your investments, eroding your savings and future financial security. Geopolitical turmoil, especially in such a vital region, creates widespread uncertainty, and Wall Street, the heart of global finance, hates uncertainty more than anything. It thrives on predictability and stability. Energy supplies, the lifeblood of modern economies, critical shipping lanes that facilitate global trade, and the very foundation of global stability are all put at risk when tensions escalate in the Middle East. Investors panic, triggering sell-offs. Markets swing wildly, creating a climate of fear and instability, and prices rise sharply, especially for energy, as supply chains are disrupted and anxieties about future availability increase. Higher energy costs inevitably translate to higher prices for almost everything we consume. This includes gas for your car, groceries on your table, and the cost of shipping goods across the country. Inflation surges, eroding the value of your money, and central banks face tough choices about how to respond. Ultimately, your purchasing power shrinks, making it harder to afford the things you need. In a deeply interconnected global economy, what happens between Tehran and Tel Aviv can have a direct impact, even raising the price of milk in Toledo. It's a domino effect. Conflict fuels instability across markets, accelerating inflation, and triggering significant market volatility. Stay tuned to understand in greater detail what's happening in the region and around the world, and more importantly, how you can take steps to protect your money and your financial future. Oil is the world's economic lifeblood, the fuel that keeps industries humming and economies growing. It's the lifeblood that powers our modern world. And now the escalating Iran-Israel conflict threatens its flow, casting a shadow of uncertainty over global energy supplies. This tension adds a layer of risk to an already volatile market. The Strait of Hormuz is a narrow choke point, a critical artery for global oil transit. A staggering 1/4 of global oil passes through it daily, making it indispensable to the world's energy needs. Any threat to close it, even temporarily, sends oil prices soaring and rattles markets worldwide, creating ripples of economic anxiety. Disruptions here mean higher costs, impacting everything from transportation to manufacturing. This has a knock-on effect for energy and shipping worldwide, affecting supply chains and consumer prices. Remember the Red Sea crisis? The recent events there serve as a stark reminder of the fragility of global shipping routes. Attacks forced ships to detour, adding thousands of miles to their journeys. This raised costs and caused significant delays, disrupting supply chains across the globe. A wider conflict could cripple global trade, bringing commerce to a standstill. This would spike shipping prices, making it more expensive to transport goods. Ultimately, this could lead to empty store shelves, as essential goods become scarce. Higher energy prices act like a tax on everyone, a burden felt across all sectors. This impacts consumers, companies, and entire countries, squeezing budgets and hindering economic growth. The energy squeeze is immediate and painful, hitting wallets and bottom lines hard. And unfortunately, it's not going away soon, suggesting a prolonged period of economic strain. Watch oil prices closely. They offer insights into the health of the global economy. They're the first signal of trouble, a leading indicator of potential economic storms ahead. Geopolitical chaos sends shockwaves through Wall Street, creating a climate of uncertainty and fear. The markets react swiftly to these global events. In this volatile environment, some stocks inevitably tank, plummeting to new lows while others unexpectedly surge, defying the overall market trend. Losers? Airlines facing headwinds from multiple directions, cruise lines also heavily impacted by travel restrictions and economic anxieties, and travel stocks in general, hit hard by higher fuel costs, which cut into profits, and a significant decrease in the number of travelers willing to take to the skies or seas. Tech and consumer discretionary stocks, particularly those reliant on global supply chains, suffer as supply chains falter, leading to shortages and increased costs, and consumer spending drops due to economic uncertainty. But amidst the turmoil, there are always winners, companies and sectors that benefit from the changing landscape. Defense companies thrive as military spending rises in response to geopolitical instability and increased global tensions. Oil and gas giants, the energy behemoths of the market, benefit significantly from supply fears driven by geopolitical events and production cuts leading to substantially higher prices at the pump and record profits. Gold shines brightly as a safe haven asset, attracting investors seeking refuge when markets panic and traditional investments become too risky. The US dollar often strengthens considerably as global investors seek the perceived stability and security of the American economy during times of crisis. Smart and savvy investors understand the importance of sector rotation, strategically shifting their investments into sectors that are poised to benefit from the unfolding crisis. Don't just panic and react emotionally. Take a calculated approach and know precisely where the money is moving, identifying emerging trends and opportunities. Position your portfolio proactively to weather the inevitable storm, mitigating risks and strategically positioning yourself to capitalize on emerging opportunities. Understand intimately what you own in your portfolio and, more importantly, the underlying reasons why you own it. The world's unpredictable, but you don't have to panic. Diversify. Own different sectors, asset classes, and geographies. Hedge with energy, defense, and a bit of gold for insurance. Hold some cash to seize opportunities when markets drop. For most, low-cost index funds offer broad diversification and long-term growth. Don't try to time the market or pick winners in chaos. Stick to your plan. Knowledge is power. Understand how global events impact your money. Review your portfolio and make sure it's built to last. The next crisis is always around the corner. Be ready, not reactive. Don't get mad, get diversified.